Oh, good morning, gentlemen. I'm your senior partner. Just 2 seconds of introductions. We tried to put our names. We're happy to have you make a presentation to the partners and the client. We have Barack. We have my younger colleague here, and we have Mikhail, who was able to join us. And the floor is now yours. And Amanda, you may now start the timing.
All right. Hello, and thank you to everyone for being here today. My name is Holden, and my associate's name is Will. We are JD team number 18. Will begin by discussing whether Barack will be treated as an investor or a trader in tax year 2019, as well as whether he can make a Section 475F mark-to-market election. Can you mute your volume? As well as whether Barack can make a Section 475F mark-to-market election, as well as the extent to which he can deduct his capital cryptocurrency losses, his ordinary necessary trading expenses, as well as Barack's investment interest expenses. I will follow up by discussing the 2 notices of deficiency Barack received for tax year 2019, as well as Magda's potential worker classification challenge. And with that, I'll pass it over to Will at this time.
Thank you, Holden, and thank you everyone for being here with us today. Before I dive into the substantive issues that Holden mentioned, we believe it's important just to talk about the context of the larger issue here, and that is the loan that Barack and Mikhail are seeking to purchase this roofing company. And you'll notice throughout our presentation that most of our advice and our conclusions, they're really driven by this overarching goal of securing this line of credit and ensuring that they can meet this rapidly approaching closing on this business deal. So with that, I'll begin by discussing the dealer, trader, or investor status issue. If you'll turn your attention to our exhibit, which I believe you all received, Exhibit A, you'll see in item 1, just a summary of a breakdown of these different losses that we're discussing today. So just so you know, the status is that issue. It really makes it depends on how these losses are going to be treated in certain different ways. So we've broken that down here for our presentation. And just to overview, so we've got 55,000 in true capital crypto losses related to that operation. There's 10,000 in ordinary and necessary expenses. And then there's the 3,000 in investment interest expenses that we're going to be discussing today. So we can quickly do away with the potential for dealer status. The code defines and case law, clarifies that dealers are those who engage with clients in the regular course of their business. And because Barack's trading activity did not involve clients that he was dealing with, he's not going to be a dealer for tax purposes in the year 2019. So really the issue that we're talking about is whether or not he would be considered a trader or an investor for tax purposes in this year. So the difference between traders and investors, it's a question of fact, a determination of fact. The Supreme Court has said that in Higgins. And so the courts over the course of time have developed a list of non-exclusive factors to make this factual determination. But really those factors can be boiled down into 2 big issues. And that is whether or not the individual is engaged in the trade or business of trading in securities or cryptos. And that activity has to be frequent, regular, and continuous in order to rise to the occasion of carrying on that trade or business. The other big factor here is the intention of the taxpayer. So when they engage in their activity, were they attempting to catch the swings in the daily market and profit off of those changes? Are they trading rapidly on a daily, nearly daily basis to catch those swings? Or was their intention and their activity more evidence of investor, intent, where they were buying and holding? They're seeking appreciation in the value of their assets. And yes.
Will, can a person be simultaneously both a trader and an investor?
So, and I'll talk about this a little bit more when we get to the 475F election. But the answer is that if you make an election or if you do your accounting in the way that you are separating those things out. So let's say you're carrying on a trader business, you've specifically marked or earmarked in your accounting on the day that you purchased the asset in question that it is for your trader business or it is for just investing. That would be a possibility if that answers your question.
Wait, well, continue. I should not have interrupted you. Go ahead.
No, you absolutely, anytime you'd like to. Happy to answer any questions. So So back to these factors, these are the 2 big ones. And then more recent case law, specifically in the case of Chen from the 2004 tax court, which has been cited, multiple other cases like K, it brought in a new factor that the court seemed to rely pretty heavily on, and it's the primary income producing activity factor. And so because Barack's full-time job outside of this trading activity existed, and he was deriving his primary source of income from this developing role at the insurance company, that is really going to work against him being able to secure trader status. So that's a big thing that the courts will look to. Another issue is whether or not the trading activity exceeds a single taxable year. And even though Barack's activity was based on the number of trades and the information we provided, high in volume, if somebody is only daily trading for a portion of the year, which the information Barack provided evidences, because he had this holding period. He was a bulk of his funds were in the blue chip coins, and he was holding them more, and then that shifted about 5 months in. So if we look at the frequency of trading going up towards the end of the year, because that's only for a portion of the year, the daily trading, that could be deemed sporadic and would fall outside of the frequent, regular, and continuous requirement for trade or business to be carried out.
So what advice, look, our clients pay us to give them advice.
Yeah.
What advice are you going to give Barack here? Are you going to tell Barack to treat himself as a trader or as a dealer?
I'm very glad you asked that. So if you refer back again to our exhibit in item 1, really it's important to, again, let's think about the context of this loan and securing this line of credit and this deadline. So what we want to know is, why do these statuses matter? What do we actually stand to gain from being a trader or fighting for trader status when the facts are kind of against us here? It looks more like investor status based on the activity Barack engaged in. So if we look at this, the bulk of these losses, the 55,000 in crypto losses, those are going to be limited whether or not he's an investor or a trader under the 1211B limitation. So unless there are additional capital gains that Barack had in 2019, he's going to be limited to $3,000 of utilizing those losses for the year 2019 under that limitation. So the vast bulk of these losses is going to be limited either way. So really what we're thinking about and looking to when we're talking about the difference in these two statuses is this $10,000 of ordinary necessary expenses. So that's the biggest difference. If he's an investor for 2019, he's going to be completely limited on these ordinary and necessary expenses, unfortunately. So, and that has to do with the changes from the Tax Cuts and Jobs Act. 67G has suspended miscellaneous itemized expenses through 2025, and that would include the 212 production of income expenses. So unfortunately, those are going to be disallowed, and they're going to be disallowed forever. But when we look at the value of that deduction or that expense for Barack in actual dollars, based on, unless he has additional income beyond the $140,000 a year job that we're not aware of, that's going to put him in the 24% bracket. And so the value of that $10,000 deduction really only going to amount to about $2,400 in actual tax savings. And so
does that assume, do you know whether or not he itemizes?
We are not aware based on the information we have. But that goes to another point that I will bring up. There's a few pieces of additional information that we would like to know from Barack specifically. One of them is if he's going to itemize, if standard would be better for him. And in addition to, does he have any other holdings? Did he sell and have any other gains in 2019? So there's a few pieces here still missing, but just based on the info that we were provided so far, that's a good, at least.
Let me ask Barack, you're here. What can you tell them? Do you have anything that would potentially change the way they're looking at this?
I don't know. You're my attorneys. You're supposed to know this answer for me. Yes, I do believe I do have some other gains in the year from other transactions. So are you telling me that would help?
That's going to help you a great deal, because you're going to be able to offset more than 3,000 of these 55, the bulk of the losses, based on additional gains. So if you can give us some more detailed accounting, we can compute that exactly, and we can give you the actual amount of, that you'd be able to utilize of that 55, in addition to that 3,000 limitation we talked about before. So that's a good thing, and we're happy to hear that for you and your tax bill. So back
And
to
Will,
yeah.
sorry to interrupt, but
No problem.
would that make a difference whether Barack takes the position that he was an investor or a trader, or is it going to be the same in that context?
So if he has additional gains, it just changes the worthwhile question, really, right? So he's going to benefit more from these losses, but that 55,000, the treatment's going to be the same investor or trader either way. So it's really just about the dollar amount of value that he's going to be able to offset. So it doesn't really change exactly whether or not he's an investor or a trader. And to bring it back to this, to just tie it back to this loan, the bank and lending officers, they like certainty, and we know we're on a quick turnaround here. And so while we could proceed as trader, we could fight for that, we can do that. Investor status is the more conservative approach and would provide more certainty to a lending officer when they're deciding whether to extend this line of credit. It's highly unlikely to ever be challenged by the service, as opposed to where trader status, it's definitely more on the line. And so there's just a little bit more risk there. And so I think it's just important to remember that. And I want to talk just briefly about these investment interest expenses. So while there is some different treatment between trader and investor status on those, unfortunately, unlike the 10,000 in ordinary necessary, even though they're going to potentially be disallowed in 2019, they would carry forward indefinitely that $3,000 expense. And based on the information Barack just provided us, if he has additional capital gains, that likely means that he has net investment income. And so this limitation on interest expenses for investor status is limited to in net investment income. So he may actually be able to utilize some more of that 3,000 as an investor than we originally expected. So that's
if
also,
we get the funding, can he change his mind and amend his return?
he could amend his return. I think we're coming at it from the perspective of what are we going to show the bank, right? And so we know this is a quick turnaround. We want to get this return filed. We want to get your taxes paid, and Holden's going to speak more about that in a minute. So that is a possibility. But the goal right now is to secure this line of credit. And so if we proceed this way, we can always have another meeting and have another conversation about how to proceed further. So final point, just real quick before I turn things over to my associate Holden, the 475F mark-to-market election. Now, if you were a trader, that would benefit him greatly because it would convert these capital losses into ordinary, and he'd be able to utilize all of them in 2019. The problem with that election is it has to be timely. And the deadline to make that election was tax day of 2019. So April 15, 2019 was when he would have had to make that election in order for it to be effective. It's much past that deadline. It's not going to be possible for him to retroactively make that election, unfortunately. While the commissioner does have discretion to allow late filings in elections, the discretion is really limited to reasonable and good faith requests, which sounds nice. And
let's assume, just for sake of discussion, that Barack decides to go back into trading. Would you recommend making this election going forward? And let me add, if you make the election, it applies to whether you have gains or losses, so it can have a lot of impact on you.
That's exactly
what would you recommend to him?
That was exactly my point. And we're not here to give financial advice. Obviously, we can just speak to the impact of the legal ramifications of that activity. 475F is very dangerous, Barack. Once it's easy to get in, it's really hard to get out. You need the permission of the service to remove yourself from that election status. And like our senior partner just mentioned, if you were really successful and you generated a lot of income from your operation under the election, it would all be ordinary and it would be taxed at a much higher rate than if it were capital. So, you just tread lightly when it comes to 475F is what we would say about that.
Right.
And sorry, was there another question?
No, thank you. Thank you.
Okay.
That was all.
And I believe that's all I have. And I'm going to turn it over to my associate Holden. I mentioned the additional information we wanted about capital gains, and thank you for providing that.
Thank you very much, Will. So next I'll proceed to speak on the 2 notices of deficiency that were received by Barack in 2021 for tax year 2019, as well as MAGA's potential worker classification status. And I'll start by discussing the 2 notices of deficiency, and I'll just generally explain that general process about how notice of deficiencies take place and what we can do with that. But at the outset, I'm just going to say that the second notice of deficiency that was mailed to you on August 28th is going to be valid, and that notice contained the additional 10% penalty on your early 401k withdrawal. So just to explain the process, to explain why we say that, when you do not file your taxes, or the IRS believes that you owe more in taxes than was reported, it will issue a notice of deficiency, which is exactly what it did on July 1st. And when it mails that notice, we call this, you have 90 days to file a petition in tax court to challenge that deficiency. So we call the notice of deficiency, we can call it a 90-day letter. So after you, again, you can make that challenge in tax court, or you can pay the taxes, and neither of those were done here. And until the time that you file a petition in tax court, a subsequent second notice that asserts additional deficiencies can be issued by the IRS. And again, that happened here when the IRS mailed you the August 28th notice of deficiency. And so your failure to file the petition in tax court allowed the IRS to send you the subsequent notice of deficiency. So it's valid in that respect. And the validity is not defeated by the fact that this notice was mailed to Mikhail's home, and it was addressed to you while your last known address was in New York City. And that is because these notices will be valid even if they are not sent to your last known address, as long as the taxpayer, you, Barack, received actual notice of the deficiency without prejudicial delay. And because you lived in Mikhail's New Orleans home since June 15th, and there's still time to file this petition in tax court because you have until November 26th, there is no prejudicial delay. So this notice will be valid. Now,
I just read something in the newspaper. There was an argument at the Supreme Court that said perhaps, the deadline isn't a firm deadline, it's something called equitable tolling. Would that apply here?
it's very unlikely to. The established tax court precedent has established basically that, and your question, it goes to whether or not there has been prejudicial delay that would prohibit Barack from being able to timely file the petition in tax court. And the precedent, the trend in the cases has been that if there is time to file a petition in tax court, whether it be 16 days or something like that, which we would definitely have here, that notice will still be valid. So I don't believe that equitable tolling would apply here to Barack. Now,
I don't know how they knew he moved with me in New Orleans. His last return, right, Barack? You had your New York address, didn't you? So why isn't that his last address?
Well, and so the last known address, the tax court has also made clear that the IRS is not required to send these notices of deficiency to the last known address. The last known address is merely a safe harbor for the IRS to send this notice to. And it really depends on actual notice. And again, because you had lived there since June, you would have received actual notice of that, and there was no prejudicial delay. So unfortunately, this notice that contains the additional 10% penalty, it will be valid. And just to move on to another procedural issue, you stated that you received a letter from the IRS asking to rescind the July 1st notice. And while a letter from the IRS asking you to do that is permitted, the rescission can only take place if you consent to rescind the notice. And we'll just say that it's a good thing that you did not agree to rescind the notice for a couple of reasons. Really, there's nothing to gain, because if you did rescind the notice, the IRS could always just allege additional deficiencies in tax court if you filed a tax court petition. Second, the statute of limitations would be told from the time that the notice was mailed to the time that it was rescinded, and that tolling will allow the IRS additional time to assess additional taxes against you. So it only benefits the IRS. And another consideration.
Holden,
Yes.
sorry to interrupt, but what is the statute of limitations right now on Barack's 2019 tax year?
I believe it is 3 years that the IRS can assess additional taxes.
3 years from when?
Well, from the time that the taxes would have been due. So in 2019, that would be April 15th of 2022, or I'm sorry, of 2023. So, but again, another consideration that you must take into account is that interest will accrue on your unpaid past due taxes at a rate of 3.22%, and that interest will accrue daily. So this can amount to a pretty substantial penalty. And just, I say these things because you should not have agreed to rescind the notice of deficiency. And I say that because it provides me an opportunity to go back to what Will was saying, how the bank and lenders generally, they will want as much certainty as possible when they are going to issue a line of credit to you. And one of the, and to provide the most certainty possible, what you can do is either pay your taxes as soon as possible or make a deposit with the IRS to pay for those taxes. And what that will do is allow you to stop the bleeding with respect to the interest and the penalties that you're accruing, minimize the amount of taxes that you'll have to pay over to the IRS. And most importantly, provide the bank with the most certainty possible and increase the odds of closing of the deal as soon as possible as well. So, and again, I just want to make clear that we can ignore the July 1st notice of deficiency and just only focus on this August 28th notice of deficiency. And again, it contains the additional 10% penalty on your early 401k withdrawal. Those penalties, they're permitted by section 72 of the tax code, and they'll apply unless an exception applies. And the only exception that could possibly apply here is the qualified higher education expense exception, but unfortunately it will not apply to you because that only applies to individual retirement plans. And the code's definition of individual retirement plans does not include 401k plans, while it does include IRA plans. So in tax year 2019, you'll have to pay this penalty. The exception will not apply, but we can also offer some additional advice that if you plan to make additional expenditures for Magda's college education in later years, you can roll your 401k plan over into an IRA within 60 days and you'll avoid the penalty in later tax years.
But given that we... Oh, sorry, Holden, I didn't mean to cut you off, but I've only got 5 minutes until I've got to go back to my trading, and I really want to address my daughter's situation. I really think she's getting a bad deal from her company. So can you tell me, I don't really understand what the impact is to her. And then if you're telling me there's some kind of negative impact, what can we do about it?
Yes, thank you and I want to get to that too, because we have a hard stop. So let me provide a couple of conclusions and say a couple of things real fast. First off, there would be no ethical issue prohibiting us from representing both of you because there would be no conflict of interest. There's no direct adversity between the two of you, and the representation of one would not limit the representation of the other. The process that she will go through to challenge her worker classification status is that she'll file a Form SS-8 with the IRS. And what that is it's a 4-page questionnaire that assesses the behavioral control and the financial control that Ryder has over Magda, as well as just the general relationship between the two parties. So that will be sent to the IRS, and then the IRS will then send a blank form to Ryder LLC asking it to rebut Magda's arguments for why she should be reclassified from an independent contractor into an employee. And then the IRS will then issue a final, non-appealable, and free determination as to whether she should be reclassified. I would like to point your attention real quick back to Exhibit A, Item 2 of that exhibit. Because it really does a good job of illustrating the difference in tax treatment that she faces right now. So as it currently stands on the right side of the column, self-employed independent contractors must pay a 15.3% self-employment tax on their self-employment income, whereas employees must only pay a 7.65% tax on the wages that they received. The employer would then pay an additional 7.65% tax on the wages it paid. As long as Magda has not filed her returns, she would stand to gain 7.65% of the income she made while working with Ryder LLC. But we also need to note that if she has filed her taxes, other deductions can be taken off from her taxable income, including the 1/2 deduction of self-employment taxes and the deduction of qualified business income, as well as any other trade or business expenses that she incurred. So just taking into account these expenditures, we can definitively say that as long as her tax rate's below 27.667%, she will pay less in taxes as an employee. And that means that with marginal tax rates rising from 24 to 32%, with income around 163 to 164,000, as long as she makes less than that, she will prefer to be reclassified as an employee. But to provide an exact amount of money that she stands to gain, we'll need more information such as her income, that she had, whether she had taken deductions, and whether she was a dependent or not. But at this point, we'll tell you the maximum amount that she stands to gain is 7.65% of the income she made while working with Ryder LLC, minus the tax benefits of any of these deductions that she would lose if she were reclassified as an employee. And just real quick,
if she asked the IRS to reclassify her, is the company going to find out? Because if they fire her,
if she's fired, she can bring a retaliation claim under labor law. They cannot do that. But real quick, I'd like to get to a couple more points real fast. So to claim this money, she would have to first make an administrative claim with the IRS, and if that doesn't work, she can sue the government for a refund. And the deadline for her to do so is 3 years after she filed her taxes. That would be the earliest possible deadline under Section 6511. If she has filed this SS8 not yet received a determination, she can preserve her claim by filing a Form 1040X and stating at the top that is a protective claim. And lastly, I want to emphasize that because this is not the result of an audit or an examination, this is non-appealable, although Ryder LLC might be entitled to safe harbor relief that would allow it to continue classifying her as an independent contractor. And we'll need more information to provide you exact certainty whether or not we believe that challenge could actually hold up. And thank you.
Thank you. That was a very good quick ending, but I do appreciate you keeping into the time limits. Thank you very much. We will adjourn, but you hang around and we'll be back to give you feedback in a few minutes.
Thank you.
Thank you.